Hi, everyone. This is Sean Heidemann. I am a real estate broker here in the Phoenix, Arizona area. Today, I am recording my market video for the month of March 2025. I'm going over some information here about a lot of the uncertainty that's going on in the market right now, which affects the bond markets and in turn affects the mortgage rates as well. So the Federal Reserve did lower their rates, but the mortgage rates haven't really gone down much due to a lot of the uncertainty and other things that the government has been doing. But so this shows us what happened with the Dow Jones Industrial Average when Donald Trump got into office. The market went down a little bit here, and then it came up, and then now we're down again. But historically, we're just down a little bit. Here's the other tariffs, what happened when Donald Trump was elected before. So tariffs were elected, and then the market dropped, and then we eventually went back up. And then here was COVID. We had a major market crash there, and then once that was over, the uncertainty, then the market went back up. So what I'm going to show you, well, let's go to the next slide here. This is what happens with Bitcoin here. So right around January 25, Bitcoin was doing fine, and then now it's gone way down. It's actually right around 84,000 right now. And here's what happened in the election in November. So Bitcoin shot way up, all the way up to 100,000, and now we're back down here around 84, around that mark. So the Bitcoin market has also responded to a lot of the uncertainty in the market. So I have this program. It's called Thinkorswim, where I trade some stocks occasionally. And so this is the NASDAQ composite. So this shows you, so Donald Trump was in the office here. So things were going well until we hit here around February 24th. And the market has just crashed. So it's down. Here's the Dow Jones Industrial Average. Similar effect right around February 20th. The market has crashed. And then SPX. And then S&P 500. Market has crashed as well. So due to a lot of the uncertainty, and I'm going to show you another thing. It's called the VIX. The VIX is the Chicago Board of Options Trading that calculates market volatility. So when the volatility goes up here, then the stock market tends to drop. So this is a inverse relationship with the stock market. So when there's uncertainty, the VIX volatility goes up, and as we are right now, things are kind of starting to come down. The uncertainty has subsided. So why am I going over all this information? So basically, a lot of the uncertainty that's in the market, it affects the bond market and also mortgage rates. Also exchange rates as well have dropped. So the dollar has gone down. So what makes the dollar increase is with interest rates. So when interest rates go up, then that helps the dollar. So that also affects our currency. Right now, interest rates are expected to come down. So like I've gone over before some of my previous presentations, so recessions, when a recession is declared due to high employment, then the mortgage rates typically drop. How is our current market right now as far as employment? This is shows you all the sectors. So healthcare is actually number one in our industry, and information technology is actually declining. But construction, education, government, hospitality, this kind of shows you the industries in our market. As far as Arizona unemployment is concerned, we are doing fairly well. So total employment projected to grow at 1% annually for our market. So now I finally got to the interest rates. So interest rates have gone down. Like I showed you, the VIX, the inverse relationship. So there was a lot of uncertainty, so rates kind of stayed high. And now that the VIX is starting to adjust, then now we're starting to see all that uncertainty is subsiding, and that eases up on the bond markets, and then as well as the mortgage rates. So we're starting to see some rates go down. Hopefully they'll go down a little bit more. We really need to be closer down to 6% or below 6% in order to really improve our affordability in our market. But so enough of that. But so let's go over the statistics of how the market's what's going on in our market. So accepted contracts. Good news is it is up, actually a little bit higher than last year right now. And this is the Cromford Market Index. This shows you if we're in a buyer's market, seller's market. So right now we are in a buyer's market. So this overall as a whole, the buyer's market. So demand is down and supplies are right about 100. So that puts us at a market index of 83.9. And so this chart here shows us the market Cromford Index historically of where different buyers markets were. It's 2006 to 2008. We had a long buyers market there. We had a buyers market here in 2010, 2022, and then now we're currently in a buyers market right now in 2025 in some cities. So this shows you the cities that are currently still in sellers markets. If you remember from the last presentation, this list was a little bit longer than it is now. Here's some other ones: El Mirage, Anthem, Tolson, Balanced Markets, Glendale, Mesa, Avondale, Buyers Markets, Goodyear, Surprise. Here's some other buyers markets as well. So why am I going over this information? Well, if you are looking at purchasing a property in one of these markets, let's say it's a buyer's market, so you can be more aggressive with your offers and try to get more concessions and price reductions from the seller. But if you're in a seller's market up here, one of these, then it may not be as advantageous. There might be some competition still in the market. You can still get concessions, but you just can't be as aggressive with your offers. So July sales counts. So this shows from February to February. So from 2023 to 2024, 2022 is when the federal government raised the interest rates, and that's what caused our market to slow down. But overall, we are just kind of keeping up with the last 3 years. Greater Phoenix, is it overvalued? No, it's not overvalued. This is a projection chart that shows you from a 5-year annual appreciation. So if houses appreciated at the national average here in the Phoenix area, we would still be right around 393,000. And it's right now we're just slightly above the projected 5-year annual growth. So once again, interest rates affect affordability more than value or the price of the home. So once interest rates go down, then things will be more affordable for everybody. Okay, so this is the weekly price reductions. So weekly price reductions are up. This is only because beginning of the year, all the listings that did not sell through the holiday season, all those sellers are that want to sell or not take it off the market are reducing their prices to compete with the new listings that are coming on the market. And seller concessions, right now it's about 48% of all transactions have some sort of seller concession. So definitely you want to ask your sellers for a concession to help buy down your interest rate or pay for some of your closing costs. And this chart here shows the price breakdown by price of the seller concessions. So the largest amount of seller concessions is right around 350 to 400,000. The next one is 400 to 500,000 and 300 to 350. So if you're in this price range, then about 60% of all transactions have some sort of seller concession. So definitely you want to include that concession in your offer. But as you look at the higher priced homes here, it's less and less concessions, more than likely because they care more about price reduction as opposed to a concession in those price ranges. But definitely use this information to your advantage. And so here's the overall summary of everything that's going on in the market since February. So the average sales price per square foot looks like it's up. Median sales price from last year is up 4.3%. Sales over asking price is down 1%. Seller concessions is up 2%. Seller concessions is flat, the same. Sale to price list ratio is down 0.3, and medium days on market is up 4 days. So hopefully this information that I presented in this video is advantageous to you and you enjoyed the information. Please stay tuned for the next video that I will do for next month's market report. But don't forget to subscribe, hit my subscribe button below, and if you want to reach out to me and contact me, I have all my contact information under the More Informations tab, and I'd be happy to answer any questions that you have. Thank you for watching.